Hi, I want to thank you all for coming today and to discuss this investment opportunity. So we're going to talk to you about 80 Broad Street. First we'll go through an investment summary, we'll go over some highlights, the present operation, our management its objectives, and go into the financial condition, current financial condition, some alternative strategies, and our recommended strategy and corresponding financials. A little bit to go over the investment itself. The investment is a note sale. It's a senior note of $75 million secured by the property. It's currently being handled by a special servicer called J.E. Robert Company. The property itself is located at 80 Broad Street. It's 410,000 square feet, 36-story property built in 1930 with a design of Art Deco. The location is in downtown Manhattan and what is also known as the Financial District or Wall Street. It's located between Stone and Beaver Street on Broad Street. Some highlights of this specific project include its location. This is a prime opportunity to acquire a note secured by a prominent office building in an excellent location in Manhattan. It also presents a leasing opportunity. Currently has a 78% occupancy rate, but it presents the opportunity to improve this occupancy and also has a rollover of 35% in 2011. With this, there's potential repositioning option with potential office condo conversion. This is due to its high ceilings and has 360-degree views and also has favorable lease rollover and is able to capitalize on this demand. Some problems to be solved with this is the current building ownership's reputation. The borrower is currently defaulted and has failed to repay their rollover reserve and additional defaults for non-payment of trades. The note has been accelerated, but the property is currently providing enough cash flow to service the note. Another problem would be marketing because of that poor reputation. And as I mentioned before, the stabilization and lease up, because the rollover 35% in 2011 and an additional rollover of 18% in 2012. Another problem to be solved is the market vacancy and competition. Although it's not a direct competitor, the World Trade Center site is coming online and is estimated at 10 million square feet. And also Seven World Trade Center, which is also existing, as well as the recent vacancy of Goldman Sachs building also add some competition. Another problem to be solved is to take a look at the current capital stack and analyze the loan structure to determine if there's any value in either purchasing or selling the debt in order to maximize returns. The present operation, 80 Broad Street is owned by Swig Equities as a senior note on the property of $75 million, and Swig also owns a mezzanine loan of $12.5 million. This property was sold to Swig in 2004 by the Premium Group and for $70 million, and they made a down payment of $6 million. As I mentioned before, the capital stack, Swig owns a senior note with a balance of $75 million, an interest rate of 6.3. The maturity is 2016. They also have a mezzanine loan of 12.5. So to go into our management objectives, basically I'm here today to present the strategies that we recommend in order to maximize our return. We believe 80 Broad Street offers this opportunity to capitalize on the strong demand and the quality of the asset and its location. Because it is in the midst of a rollover, we feel that in the loss of a lot of tenants, there's an opportunity here to purchase a senior note at a drastic discount and look for this value-added property and fulfill our need as an investor for return maximizing investment. Basically, we'll fulfill these objectives by providing a value-added investment of a Class A office building in Manhattan, well located in a submarket, either under-leased or under-managed, and requires repositioning with a minimum of IRR of 15%. Some building characteristics. The property was recently renovated in 2004. It was involved in a $10 million capital improvement program. We have a new lobby, new storefronts, concierge, fire and life safety systems, as well as new upgrades to the electrical system and HVAC. To go over some physical characteristics, foundation is a combination of reinforced concrete and terracotta. Structurally, it's non-load bearing masonry walls with concrete and steel. The facade is a limestone panels and glazed brick veneer. And the windows are aluminum frame, double pane, insulated double hung units. Those were replaced in 1985. There's frontage along Broad Street of 131 feet and 107 feet on the north and south sides. One of the bonuses to the potential office conversion is the floor plates, which range from 8,700 to 14,660. To go into a little bit of market study, as I mentioned, is located in the financial district, Wall Street area. And to go into regional analysis, I basically covered the entire New York City office market. You can see in stats here that there was 3 million square feet leased in February, which is 89% higher than February of last year. Overall vacancy is down 10.3%, down over 4.7 million square feet less than it was in March 2010. So overall, year over year, you can see that the market is improving. You can pause it. Just press the middle button.